Hi, I'm Owen Poveda with Remax Preferred Properties, and do you want to know everything you need to know about financing investment properties here in the Smokies? Well, today you're in luck. I'm here with Kristin Lewis with Mortgage Investors Group, and she's a loan officer with many years, I'm not allowed to say how many years of experience. So Kristin, what can we do to finance investment properties that's easy?
Well, Owen, we've got several options here at Mortgage Investors Group. You can actually finance a second home with as little as 10% down. And a second home is going to allow you to come and visit and vacation and things like that. So the difference between a second home property and an investment property is that on a second home, you can't actually use the income from the property itself for qualifying purposes. But on an investment property, you technically can. We can do an investment property with as little as 15% down, and we've got some other options too.
So let me see if I understand that correctly. I could take the income of my overnight rental cabin and count it towards what's needed for the payment, the debt-to-income ratio? I can use that?
You most certainly can. On an investment property, you can. Cool. And we've got some different products that are out there. I know that under the basic conventional mortgage, you can do that. And then we've also got a loan that's called the DSCR loan.
Lots of letters.
I know. The mortgage industry loves acronyms, if you will. Yeah. So let me just play it out there for you. It's actually a debt service coverage ratio loan.
Okay.
And the beauty of that is that we don't do any income verification, we don't do any employment verification, but you technically can just use the subject property as the qualifying income for the property.
So I know a lot of times when I'm showing property to customers, it already has an income history like several years back. So you can just go off that income history and qualify the loan from that?
Appraisers do that. But yes, absolutely. But that's where they get their information from, and that's what they use to fill out a form that we require, and that basically gives us the income for the proposed income. And then we take that proposed income, and then we use that towards the qualifying payment. Now, there is a couple of stipulations that we've got to make sure that under the debt service coverage ratio loan is that it's got to be a 1-to-1 ratio. So to give you an example of that is if your payment is $5,000 a month, then the actual proposed generated income has to be that exact same number, that $5,000. So it has to be at least that amount.
So the property has to at least even cash flow.
Absolutely.
Okay. Well, that's not too terribly bad in the Smokies. That's fairly easy to do.
Oh, I think that it's an easy thing to do in the Smokies. I see them every day.
Yeah. I also heard in there that there's less documentation. You're not going to pull 20 years of tax records and stuff like that on me?
It's only 2, Owen. But yes, we're not.
It seems like 20.
But we're not going to do that. We're actually under the DSCR loan. The beauty of that product is that we don't verify any of the income. We don't verify any of the employment. So we solely just rely on the income of that property to qualify.
But you're still going to pull my credit, right?
I am going to pull your credit.
Okay. I understand that. I think that's probably a smart thing to be doing.
And we were going to make sure that you got 20% to put down under that DSCR loan.
Cool. And these loans are 30-year terms, right?
These are 30-year fixed rate mortgages.
Okay. And so for the DSCR, since everything that comes, all these good goodies comes with a price, it's a little bit higher interest rate, I assume?
You're probably going to, everything is evaluated by risk. So it's a little less riskier for us not to verify some of the things or whatever. So it's going to be slightly higher, but nothing too terrible. And what do you care?
As long as the cash flows and that appreciation's there. Yeah. But I think, for me, I'd want to look at that conventional first and see if I fit all those little guidelines. And if not, no, there's another product out there that I can use.
Exactly it. And that's what I do. That's my job. That's what I do. I go in and I make sure I look at the whole entire overall picture and do the best for the customer.
Because these days, everybody's situation is different. Nobody lives in that perfect little box anymore.
Exactly.
Yeah, very good.
We built outside the box
to
help them out.
Very nice. Well, there you have it. So we have a nice little summary there of the different loan values or loan types available for your investment properties. Give Kristin and I a call. Our contact information is here at the end. And we'll get you going, and soon you'll be an investor right here in the Smokies.
30 days.
There you are. Thanks.